Mutual fund sahi hai. This is one simple tagline which can really change your future wealth creation journey. It's a powerful message, mutual fund sahi hai, and it's a message which millions, I would say crores of Indians have truly adopted. So we want to take this entire spirit of mutual fund sahi hai, Smart Nivesh Sahi Nivesh. Now, talking about investing is old school, but talking about the right way of investing is something which we would be really focusing on. And we're very grateful to AMFI that they have partnered with the Times Network to take this message forward. And I'm going to take this message forward with Navneet Munot, and he's been very kind and generous with his time and always, joins us when it comes to investor education. Thank you very much. Truly grateful that you could partner with us.
Thank you, Nikunj. We are proud of this partnership. And you rightly said that we want to take this message forward of mutual fund sahi hai. Over the last couple of years, it has done wonderfully well. I think industry has built a track record. Industry has exhibited tremendous amount of transparency, which we have increased with active support of the regulator. Technology has helped us in spreading ourselves to Bharat and to every corner of the country. And I think this training part, the mutual fund sahi hai, and why it is sahi hai for every household, I think that has played a big part in the growth of the industry. And the most heartening feature, everybody quotes about 67 lakh crores of AUM and many things, but the most heartening for us is that the unique investors crossed 5 crores last month in September. And to put that number in perspective, few years back, that number was just 1 crore. So 1 crore has become 5 crore. We are serving 5 crore unique investors as an industry. But we know that we have a long way to go. On one side, we can celebrate all the numbers. But on the other side, industry clearly knows that we have a very, very long way to go.
So for 5 to become 10 and 10 to become 20, what will it take?
I think many things, as I said, that we continue to build this trust. And I think all the ecosystem partners, and you have played a big role. I remember a couple of years back, we coined this term together, Jan Nivesh, that Jan Dhan Yojana was like a big movement for the country. 1 billion people got embedded into the mainstream financial system. Everybody got the bank account on which transactions became easy over a period of time. But the next logical step has to be people invest right. India is a country of savers. How do we make this a country of investors? And that is what we need to continue on that path and take this message to larger and larger number of investors. I think that's what industry continue to need to do. Technology has been playing a very big role. I mean, we ran a campaign, KYC आसान है. A lot of people think कि कैसे करेंगे, सुन तो रहे हैं mutual fund सही है, लेकिन थोड़ा tough है. So the easier steps, right from your KYC to right selection of the fund to how to invest, various things, we are as an industry and all the ecosystem partners, we are working very hard.
With mutual funds, everybody thinks it's equities, right? That's the first impression which you get. It means stock markets or SIPs. Is it true?
So some of us in the industry, we started career as a bond fund manager, and we have seen the heydays of the fixed income funds also. In fact, 25 years back, I remember all of us used to hear from many people that you guys are only getting money in fixed income funds. Where is the retail money? Where is equity participation in India? And it's heartening for us that now we are seeing the equity participation, particularly from the individual investors. And one particular data point I should not forget mentioning, that now industry has a larger proportion, almost 60% or so, coming in from individual investors, and in the equity funds, 90% money comes from the individual investors. And individual investors, whatever money they have, almost 85% of that is in equity funds. So it's a real, I would say, retail revolution in India that has happened. But last year, interestingly, we also did this campaign, Fixed Income Sahi Hai. We are trying to create awareness, and I would still urge the government that fixed income fund should be looked at with some more sympathy. I think we lost the indexation benefit in the last budget, and I would sincerely urge to look at that. It's about developing the corporate bond market in India. It's about helping people for creating their retirement savings through various asset classes, including equities and long-term bonds, gold, and so on and so forth. So I remain quite hopeful that even fixed income funds have long way to go.
So SIP was more like an alien word now. Now SIP needs no introduction as a concept. But when it comes to SIP, do you think SIPs have started, but the SIPs are not keeping in pace with what your future requirement would be? What looks like a 2,500 rupee SIP, which is the average AMFI number, you may continue with the SIP, but in 5 years that SIP would lose its pricing power. Is that true in the trends what you see?
You're right. The average ticket size today, so let's say 24,500 crores per month, and around 10 crore SIP accounts is like 2,400 rupees or so average ticket size, because we've also added large number of investors, so we started with a smaller amount. But you're absolutely right. If somebody started SIP 5 years back of, let's say, 5,000 rupees per month. Now, India is a country where I would say 3L you need to keep in mind. One is a larger income. We are not Japan or Europe where your incomes are not growing. We are India. Nominal GDP itself is growing 10-11% or so. Everybody's income is increasing. You have ability to save more. Number two is lifestyle inflation. We all talk about inflation, and RBI and government have done a wonderful job in terms of keeping inflation around 4% or so. But your lifestyle is changing, right? I mean, the gadgets that we buy, the travel that we do, many things that we do is very different now. Your education, healthcare, everything. So for lifestyle, you need to save more. And third is the longevity. Our average life expectancy has been on a rise. So people, whatever they have done, and they think that they have done enough, but they need to reassess and keep topping up that SIP. It's very important. And I would urge you, Nikunj, that take that as also a part of our campaign in the Smart Nivesh Sahi Nivesh, that are you investing enough?
What is the definition of enough?
So first you set a goal, right? I mean, what are you investing in? A lot of people start, and good that the awareness is there about mutual fund. सही है कि मैंने फंड में लगा दिया, या ये सेक्टर फंड था मुझे अच्छा लगता है, या ये मैंने एक फ्लेक्सी कैप में लगा दिया. But the starting point has to be for what goal you are investing. Is it a children education? Is it your house that you want to buy a couple of years down the line? Is it a car that you are aspiring in few years? Is it for the retirement? If it is retirement, then you're talking about 20, 30, 40 years of creating that corpus and then withdrawing that money in your retirement. First you do that, you then assess you look at your return expectations, the corpus that you need to build, the savings that you have today, and the risk appetite also. Each individual is very different. Your ability to or your capacity to handle the volatility. If all your money is in equity, and there could be years, I mean, we have seen in history, last 8-9 years have been very good for India. We didn't see any calendar year or financial year where we had a large correction, but there could be a year where, let's say, market is down 20%. Can you take that volatility? In the long run, you will do very well. That's the history, and that will be the future as well. But in between, can you take that NAV volatility? Accordingly, you put money in equity, some money in fixed income, small money in gold, so on and so forth. You do the asset allocation, and then you do the fund selection.
Okay. What is one common mistake which currently investors are doing? Even though they've chosen mutual fund as the vehicle of choice, you would say that, look, this is something which is like a common denominator factor when it comes to a mistake.
In general, not only about mutual fund, but 2 or 3 things I always tell people that investing mistakes. One is a peer pressure. There's always a pressure because there is an uncle, there is a neighbor, or there is a friend or a colleague who's made more money. And then you get swayed by that and you make some mistake. One is the media noise. And when I say media noise, is not people like you. You are the one who are creating awareness, who are all the time educating people. But these days, the social media and chat groups and all of that, you get swayed by that. And third is some of the behavioral biases, and particularly one of them is a recency bias. You see a certain category of fund, or you see the same thing in the stocks also, something that has done well in last 6 months or 1 year, and you think all my money should be there only. I think you need to do a proper goal planning, asset allocation, and then you do the fund selection. That's more important than just looking at the product that has given the highest return and put all your money there.
There's so much of information available on Google that everybody has become an expert. How does one go about choosing what is right, what is wrong? Because that same data can be interpreted differently.
I think there's a lot of awareness. One good thing about investors is that people have an urge to know more or to understand more, which is a very, very good thing. Also, another thing, just digressing from your question, that people say, are investors maturing now? And one of the signs of maturity is that we see that during the periods of volatility, we don't see suddenly SIP cancellation, so people deferring their SIP. On those days, in fact, when market sees a correction, we see higher number of purchase transactions. So investors are becoming more mature and not getting too swayed by the volatility. But the right way, coming back to your question, is better way would be, in case you are not able to do that, better way would be have an advisor, have a distributor who can guide you and who can look at you holistically and can put a proper financial plan for you.
We've seen a rise in SIP culture, but we've also seen a surge in F&O activity. And it's a madness what's happening there, and it is exciting what is happening in SIP. So I'll use the word madness for F&O, I'll use the word exciting for SIP. How come these two trends are parallel? Because they both are, in a sense, completely opposite, right?
So I think on a lighter note, I don't know when is the last time we were discussing this particular thing, that some people think that investing is another form of entertainment. So there are a couple of apps. It could be an app of a gaming app, and maybe an app where you are doing the F&O, and then you have an investing app, so on and so forth. And they don't see much difference between that. The one good part, when people tell me that, the crores of people, participating in F&O, they're much bigger number, which is what I hear. I don't have a way to confirm that. Playing in crypto, people in gaming apps. Apparently, there are 25 crore people in gaming apps. And then, of course, we have 5 crore investors. What I see in all of this is a big change in the society. People want to be rich. People want to make money. People want to have better lifestyle. They have aspirations and ambitions. Now, the thing is, the nirvana is only one way, which is what we say in mutual fund sahi hai. Make the right investment, have patience, give it a long time, don't try to time it. Wealth will get created over a period of time. But people are trying various things. My view is that over a period of time, more and more people will realize the right way of investing is remain disciplined, keep doing your SIPs, keep topping up over a period of time, and have patience.
So I'll steal a line which you, I think, said at a public forum, that it's good to have Josh, but don't lose hosh.
Don't lose hosh.
So F&O is where you're losing hosh, but keep the Josh when it comes to SIPs.
Absolutely, yeah.
Okay. What is the India appeal for next 5 years? For those who are watching the show, they said, okay, look, stock market's at an all-time high. Why shouldn't I redeem? Why should I stay invested? What could happen in the next 5 years?
No, I think India is an amazing compounding story. I mean, you look at the rest of the world and you compare India, we all feel very lucky. It's such a luck that we are at the right time at the right place. I always say, यही समय है, सही समय है. और अगर इसमें हमने नहीं पार्टिसिपेट किया, जब ये राष्ट्र विकसित भारत बन रहा है, जब पता है अगले 25 साल में, समृद्ध काल में, हमें from $3.5 trillion, we are going to become 5, 7, 10, 20 trillion dollars. And India is one of those few countries where we have seen the growth of the economy getting leveraged by the corporate sector in terms of their revenue growth and their profit growth. And you've got a capital market which is ensuring that minority shareholders are also participating in that growth. And you've got a mutual fund industry where you can participate in country's growth or your corporate sector's growth or the capital market returns into your funds, even by investing 500 rupees a month. So this is like an amazing place in India where large number of people or the entire population can participate in the growth of the economy by investing few hundred rupees a month.
If one looks at the average return, the 3-year CAGR for pretty much 80% of the mutual fund industry would be 25% plus. The average return in equities is about 12 to 14%. So for next 5 years, are we in for very ordinary returns, maybe no returns, because that's how average would kick in?
Took longer period, like 10 years or so. I think the GDP growth, market growth, and the funds returns wouldn't be like two away. There would always be a decade where returns are slightly higher. Stock market doesn't give you returns in a linear fashion that your economic growth, profit growth, and these are these are growing in a linear fashion quarter by quarter or year by year. Sometimes market would be ahead, sometimes the returns will get back-ended. I think if you take a 5-year plus view, you won't be disappointed with your returns.
One big change which has happened.
And it's very simple. Where do you get the returns in stock market? You get from earnings growth. Ultimately, stock price is nothing but the slave of the earning power of the company. Second is the dividend yield, and third is a change in PE. I think the next couple of years, bulk of the returns will come from earnings growth. Dividend yield in India at an aggregate level is relatively small. Change in PE, one should not expect. I think market, the valuations where they are, one should not expect more returns from re-rating of the market. One should expect returns from the earnings growth of the market.
Fair point. Now, one big advantage for the mutual fund industry is simple messaging. SIP सही है, simple है, and right है, easy है.
Yeah.
But technology has played a very large role.
Yeah.
You can buy a SIP on the phone. You can do a KYC in phone. Do you think large part of that uptick which has happened in the mutual fund industry because of technology, KYC, that is over now?
No, not really. We are constantly improving, right? So we had in KYC, which constantly we kept simplifying over a period of time, but we also need to keep in mind the safety aspect of it, right? Security aspect of it. We also see all kinds of digital frauds in the wider sphere. So the regulator and all of us as an ecosystem player have to ensure that your money is safe and you can sleep at night with safety. So obviously we build in, we make it safer as well, at the same time making it easier and easier. But it's an evolution, right? It used to take maybe a few days for people to really complete that and get all the documents. Now with the video KYC, then Aadhaar-based KYC, and then over a period of time, we have made it easier and easier. And so is the case is with the investing. And also the role technology has played in the awareness. At the click of a button, the amount of information that you can get about products and everything is just phenomenal.
The critical factor now is decision making. And if one really looks at the mutual funds, whether it is fixed income, whether it is balanced, whether it is equity, small cap, large cap, there are times when your choice really makes all the difference. If you've taken a good mutual fund, it could be in the top quartile, and the bottom quartile, the difference could be 15 to 20%. How does one go about picking up right and wrong? Because all mutual funds pretty much have the same pitch. Long-term planning, we'll protect your capital, we are process driven, we will give you great insights. The selling formula is same. It's like chai. सब जगह दूध पानी चीनी है, मगर taste सबका लगाता है.
No, but that can be talked about all the products. I think it's also, again, I think credit to the industry and to the regulator that how we have ensured this comparability, right? This whole classification of schemes few years back, which happened that when you say a large cap fund, this is what we mean by the large cap. Top 100 stocks, minimum 80% of the portfolio will be in that, and so on and so forth. I think this is another thing that we take huge pride as an industry, that what you see is what you get. If it's a mid-cap fund, then you know that this is how the mid-caps are defined. This is the percentage of stocks in the fund that will be classified as mid-cap, so on and so forth. So this I take as a positive. Some people might say it's become a commodity. Not necessarily. Even then, there is a differentiation, right?
Do you see the mutual fund industry moving towards more simplification? They say simplicity is the ultimate sophistication. So one side you've got SEBI, which has just approved some complex products now. But in general, where do you think the mutual fund industry is headed?
Different investors have different needs, right? So we have mutual funds where even with 500 rupees per month, you can start an SIP. You have a PMS where somebody wants a portfolio management scheme, a segregated account where the minimum amount is 50 lakhs. You have alternative funds which can apply more complex strategies, and they have a minimum amount of 1 crore. In between that, SEBI is working on a new asset class, NAC, which is like a minimum 10 lakh rupees of investment. These strategies may have a little higher risk. Of course, it's a high risk, high return kind of product for a different set of investors.
Okay. I'll go back to SIP because that's what we want to bring it up.
Absolutely.
Because that's the mission what we both are committed to. Let's talk about somebody who's 25 years old, starts his first SIP. What should be the process once you start a first SIP? Every 2 years, 3 years, top it up, add more when there is a bad patch. What should be the process of maximizing within an SIP?
Yeah, so instead of maximizing, I would say optimizing that, as we discussed about the goals. So if let's say at the age of 25, you know that you have a long time, right? In fact, I keep telling people it's more than your money time is your bigger asset, right? That will help you in creating a greater amount of wealth. That's what the power of compounding is all about. So you have, let's say, 30, 40, 50 years to save. You're starting at the age of 23. So first, I mean, compliments that you are starting very, very early, and you have a higher risk appetite. So if you have higher risk appetite, you don't have other obligations, you can have higher allocations to equities. Within that, first, I would argue that it should be in a multi-cap, flexi-cap, large-cap kind of funds. And if you have a high risk appetite, you can put an overlay, let's say, of a mid and a small cap, or maybe if you have a view in sector and thematic. But otherwise, you start with simple products, diversified equity fund, and then keep topping up over a period of time.
A mutual fund, technically, if I say, is able to fulfill all your basic needs, which is there is a liquid fund.
Everything, in fact, for all kinds of investing needs. So you're putting money for a couple of days or weeks, you have a product, overnight fund or a liquid fund. It's a money for a few months. Maybe you sold a house and want to buy another house few months later. You have an ultra short-term fund, those kind of funds. You have a low duration fund. You want to put money in a fixed income product for 3 to 5 years. You have a corporate bond fund or a long-term bond fund. So your product, and then of course a hybrid fund, you only want a limited amount of equity exposure. You can do a conservative hybrid fund. You have a ability to take more equity exposure, but somewhat, I mean, a little bit of fixed income also. You can buy an aggressive hybrid fund, 100% equity fund. I think from a product range perspective, mutual funds give you a bouquet where all your investing needs can be met.
We spoke about the common mistakes when it comes to investing. But when you look at the SIP move, and the data is there, which is that 10 years ago, the SIP average monthly collection was 2,000. Now it's at 20,000. But
24,500.
24,500, more than 10 times actually. Thank you for being specific here. Where is that you think the success is yet to be achieved? The number is up 10 times, more than 10 times. Where do you think that the success is yet to be achieved?
I think the way to look at it two ways. One is a flow and one is a stock. What is total savings pool of India? If let's say we are a $3.5 trillion economy, we are saving 20%, that's $700 billion of savings getting added every year. What percentage of that is coming here? It's gone up. I mean, the SIP numbers and all of that, but as a percentage, is it enough? Not necessarily. I think we have a long way to go. The other way to look at it is in the stock. The total stock of wealth that Indians would have, in 50% would be in real estate, 15% will be gold, 15% would be deposits. The equity allocation will be 5%. Is 5% enough? Not necessarily. It has to increase.
The global numbers, they tell me in other developed countries is anywhere between 25 to even 40% in US. Do you see that kind of a culture happening? Could 5 become 5, 10, 15?
I think in US, yeah, 50% plus people either own stock directly or mutual funds. Over a period of time, India will have same. Think about it. Economy that will grow from 4 trillion to, let's say, 20, 25, $30 trillion in next 20, 25 years. The amount of money that will come every year from the savings pool is so humongous. And while the government in last 10 years has done a great job in terms of providing the basic necessities, right, from a toilet to a LPG cylinder to maybe a LED bulb, basic electricity, a Sukanya Samriddhi, and the Ayushman Bharat and all of that. But will we have enough money to secure retirement of every household? Not necessarily. Households will have to do on their own. And I think that's the biggest thing we need to keep in mind, that in next 25 years, one of the big policy agenda has to be how do we ensure greater participation of every household in risk assets into the long-term assets through the capital market, through the mutual fund channel.
Well, that's the idea. And mutual fund sahi hai, I would say mutual fund easy hai, and I'll wrap the show by saying mutual fund zaruri hai.
Bilkul.
And thank you very much for partnering with us. It's always a pleasure.
Thank you so much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.